Now, I'm here today in the next 45 minutes to help you discover simple ways to increase your Forex profit potential now. Now, specifically, we'll be discussing what's called the London Breakout strategy. I'm going to teach you today how you can actually utilize trade setups during what's called the European session in the Forex market. And I'm also going to show you how you can actually look over the shoulder of a professional analyst, learn this from a live professional analyst, and you can mimic the Forex experts' trading plans here. Now, these strategies and techniques I'm going to be sharing with you here today, I've actually learned through this education. In fact, I will be teaching you the same step-by-step approach that we teach our students here. Once said, I am live speaking with you here today, and one of the things I do want to make sure that everybody does understand that trading does have its own form of risk involved. And you should not invest money that you cannot personally afford to lose. And you should always trade with proper equity management in mind. Now, there is no such thing as an undefeated season when you're trading, and you may incur losses from time to time, but the key is to keep your profits high and to have minimal losses as you're going along. Now, it is also highly recommended that you go through this complete education. You learn the strategy in its entirety, and that you begin trading as an educated and knowledgeable trader. Now, also please be advised that anything I'm going to share with you here today, I'm going to pull up my charts here in about 2 minutes. I'm actually going to teach you a trading strategy here today. But ultimately, when it does come time for you to trade live and you decide to make a specific trade, well, that is yours and yours alone. Now, before we begin, I just want to go ahead and start off. Some of you might be wondering who I am. Reed already gave me a quick introduction. Let me just go ahead, take a quick second here and introduce myself. We're going to jump into that live market. Now, a little bit about me. I've been trading in the investment market since 1998. I've also worked for several financial companies and firms, and I did help start and launch an entirely new financial services company from the ground floor up. Now, I'm also a student of Market Traders Institute. So like those of you here in the room today, I didn't know much about the Forex market. I attended a webinar like this, became interested in it, decided to take action, and I did in fact have Market Traders Institute take me by the hand, and they actually taught me how to trade the Forex market. So as we're going along here in the next 45 minutes, I'm not going to be able to teach you everything regarding the Forex or the strategy, but if you say this is something you want to learn, I'm actually going to send out a link here at the end of the webinar. I'm going to show you how you can actually get trained live by a live professional here from Market Traders Institute. Now, for those of you who are not familiar with who MTI is, MTI, it stands for Market Traders Institute. Now, we were founded in April of 1994, actually just celebrated our 21st anniversary this past April. The building you see on your screen right here, that is our building. I'm actually broadcasting out of that building here today. In fact, we're located in Lake Mary, Florida, just outside of Orlando, Florida. So you can actually come to our building, get trained live in person. In fact, over the last 21 years, we've actually trained over 30,000 students on how to trade the Forex market. Now, not only does MTI have some of the best trading strategies, but MTI also has some of the best Forex instructors and analysts in the Forex industry. One of those specific instructors, many of you may have heard of him before. His name is Joshua Martinez. He also goes by the name FX Pathfinder. Now, Joshua Martinez, he is one of Market Traders' product knowledge experts, and he is one of our Forex masterminds here. Now, he's trained thousands of Forex investors around the world. He turned an initial deposit investment of $500, generated over $39,000 of profit from it. He's made thousands of Forex investments. He's a published author, international speaker, professional analyst, and a full-time trader. Now, I know some of you might be saying, well, William, why are you telling us this? Well, the reason I'm telling you this is because he is the gentleman that created the strategy I'm going to be sharing with you here today. And this strategy, it has allowed him to do some unbelievable things in the Forex market. In fact, let me go and pull up his track record here. You can see here when he first started trading, like many of you here today, maybe when he first started trading, he was winning some, he was losing some. He was maybe winning $2, losing $2, that such thing, until he hit what's called his tipping point. In fact, if you were to look at my trading account, you'd probably see the exact same thing. All of a sudden, things started taking off. This is what we refer to as a tipping point. Now, what I'm going to be doing today is I'm actually going to show you the strategy that's really been able to assist Joshua in finding this tipping point. It's also going to assist you in finding your tipping point faster in the Forex market. So this has allowed him to have days where he's made $3,000 in a day, $4,000 in a day, $8,800 in one day. In fact, using the same strategy what I'm showing you here today, he actually generated over $10,000 in 30 minutes with the same strategy. So what I want to do is I don't want to waste any time here. I want to go ahead into the live market, and I want to teach you the strategy. It's called the London Breakout strategy. Now, I want to assure everybody this London Breakout strategy, This is only one of the strategies you'll learn when you join what's called our Live Market Trading Club. It's part of our Live Market Forex Mentorship and Empowerment Program. This is the opportunity to look over the shoulder of a live trader, learn this strategy and a plethora of other strategies during live trading sessions each and every week. Now, I know some of you might be saying, well, William, how much does a session like this cost? Well, our professional instructors here, our live analysts, they sometimes charge $1,000 for one-on-one session, $5,000, $10,000 for one-on-one trading sessions. But what if I told you that the strategy I'm going to teach you here today, get into the live trading club, it's only going to cost you $27 for the first 30 days, and you're going to get a money-back guarantee. Now, I'm going to pull up my charts right now, but I want to explain to everybody, if you're interested in this, I'm going to send out a link at the end of the webinar. Your first 30 days with a full money-back guarantee is only going to cost you $27, and there is a next live market analysis session is coming up this Monday. So it would be great to join the session, get into the live trading club, and on Monday, you actually start working with a live professional analyst. So let's go ahead in here right now. I just wanted to go ahead, explain to everybody what that is. Do I have anybody in the room here today that is brand new to the Forex market? If you're brand new, type in new or me, or give me some sort of indication if you are brand new to the Forex market. If you are a Forex trader, if you just want to go ahead and let me know whether you're trading demo, live, if you're trading the Forex in any way, shape, or form. Let's see, Helen's new, Ed's new, Brooks is new, Lauren's new. Great. So before we actually jump into the strategy here, CJ's new. Let me go ahead and explain to you what we do in the Forex market. What we do is we trade one country's currency against another in an attempt to figure out which one's going to gain in value against the other. In the case of this chart right here, this is called the Great British Pound, GBP, Australian dollar, AUD currency pair. So in essence, what we're doing on this chart is we're taking the Great British Pound versus the Australian dollar in an attempt to figure out which one is going to gain in value against the other. Now, these little rectangles you see on your screen, these are called Japanese candlesticks. In fact, what you're looking at right here, for those of you who are brand new, it's referred to as what's called a candlestick chart. Now, these Japanese candlesticks, what they're going to do is they're going to be a visual representation of how much the market has moved in whatever time frame you select on your chart. Now, if you go back up to the upper left-hand corner of my screen up here, where I'm going to put this green arrow, you can see that this says 1 day. So what that means is that each one of these candlesticks, it represents what the market has done in 1 day of trading. These white candlesticks, these are called bullish candlesticks. What these mean is that the market went up and closed up during that day of time frame. You have dark blue candlesticks. They mean that the market went down and closed down during that day of time frame. So for those of you who are brand new, all you really need to know is that white means the market went up, blue means the market has gone down. Now, what's going to happen in this market? These Japanese candlesticks, they're going to form what are called candlestick formations. And as a trader, we look at these candlestick formations that give us signals as to which way this market is going. I'm going to come in here, I'm going to circle a couple of these here. Some of the things that neat things about the Forex market is that it moves in waves. You can see here the market rallied up, pulled back, formed this candlestick formation. That's called an engulfing bullish candlestick formation. Sign language of the market. This is saying as a trader, hey, William, look for the market to U-turn and go upward in a bullish movement. The market goes up, pulls back, forms a Morningstar candlestick formation, U-turns, goes up, pulls back again, piercing line candlestick formation, and so on. So as a student of Market Traders Institute, and in these live trading sessions, our professional analysts, they're actually going to teach you about these, and we're also going to show you how to identify these candlestick formations. Now, how we actually make money in this market, what we're trying to do is capture what are called PIPs. Now, PIP, P-I-P, is an acronym. It stands for Price, Interest, Point. So let me just go ahead and quickly break this down. Let me explain this to you in the simplest of terms of how this actually works. Now, just as there are 100 pennies, 100 cents in one US dollar. There's 100 pennies in one US dollar. That means that there, 1 penny, it equals 1/100th of a dollar. Pretty straightforward. Probably most of you here in the room, pretty straightforward, already understand that. Now, if we were looking for a unit of measure that was smaller than a pip, or sorry, than a penny. It would be the equivalent to what's called a pip. Now there are 100 pips in 1 US penny, just like that. So what that means is that a pip, it equals 1/100th of a penny. Pretty straightforward. Generally, a penny is represented by the second number. A pip is represented by the 4th decimal point. The only difference is that if you're trading a Japanese yen currency pair, that's the difference here. So if I were to come in here right now, let's just say we were to have bought, say we did some analysis, we bought the market right here. Let's say we bought the market right there, and we sold the market right there. That movement right there, that would have been the equivalent to, right there, 1,690 pips. So right there, that would have been plus 1,690 pips. Now, obviously, this is a daily time frame. We're not going to be doing our trading on a daily time frame, but I just want to show you how we measure this, how this actually works. So what I want to do right now that we have a general understanding for those of you who are brand new, what I want to do is I'm going to go ahead and I want to explain to you what is called the London breakout strategy. So let's come in here right now and let's pull up my charts here. And for those of you that are taking notes, this would probably be a really good time to start taking notes, because what I have on my screen right here, these are the 6 different currency pairs that we use to trade with the London breakout strategy. Now you have here the Great British Pound Australian dollar. You can see here it says 1 hour. Each one of these time frames, each one of these charts here is representing 1 hour time frame. So you have the Great British Pound Australian dollar on a 1 hour time frame. Great British Pound Canadian dollar, Great British Pound Swiss franc, Great British Pound Japanese yen, Great British Pound New Zealand dollar, and the Great British Pound US dollar. Now, one of the things I want to get right off of the plate right now, I know many of you as we're going along, some of you might be saying, well, William, how reliable is this trading strategy? Well, what I have right here is we have these 6 different currency pairs. I'm going to show you these when we get done, but had you used this strategy this morning, you would have won 5 out of 6 trades. I'll come back in, I'll actually show you all 6 of these trades, but for those of you that are wondering how reliable, how good is the strategy, last night you would have won 5 out of 6 trades. But let's go ahead and right now, I'm going to pull up the Great British Pound New Zealand dollar currency pair. And I'm going to go ahead and I'm going to bring this down. I'll explain to you what I got on the charts right here. But let me explain to you this London breakout strategy. What we're going to be looking for in this market, what we're going to be looking for is the market to pull back or rally up and form either its high or its low for the morning. We're looking for this to happen between 2 o'clock a.m. Eastern Time and 5 o'clock a.m. Eastern Time. Now the reason for this is that there are 3 different trading sessions, 3 major trading sessions that go on in this market. You have the Asian trading session, the London trading session, and the US trading session. So what you have going on right here is you have the close of the Asian trading session and the beginning of the London trading session. So you have an overlap right here. So what we're going to be looking for is this market to form either its high or low for the morning and then give us what's called directional movement, just like that. Now we're also going to be looking for, the market to form its opposite high or low for the day, that morning. Oops, sorry about that. We're going to be looking for this between 8 o'clock a.m. Eastern Time and 2 o'clock a.m. Eastern Time. The reason for this is because you have the close of the London trading session and the beginning of the US trading session. So once again, this is what we're basing this on. That's one of the reasons why. And once again, during our live trading sessions, when you join the live trading club, our professional analysts are going to be able to walk you through this, explain this in much greater detail for you. Now, what we have found is that on these 6 currency pairs, in fact, actually, these 6 currency pairs, and once again, these are, oops, sorry about that. Once again, these are Great British pound based currency pairs. Just to give you an idea here. What we're going to be looking for is what's called the average daily trading range. On each one of these currency pairs is anywhere from plus 50 pips to over plus 200 pips per day. So what that means is that on each one of these currency pairs, we're going to be looking for directional movement of at least, we're going to be looking for at least 50 pips of movement. So the trading strategy I'm going to show you here today, we're simply going after first base, 50 pips. We're expecting, once the market forms either its high or low for the morning, we're either looking for it to rally up and form its opposite high or low between during this time period and move at least 50 pips. Now, in this market, we trade in units. These units are called lots. We have what are called micro lots. Now, a micro lot, that is generally about a $20 investment per trade from your trading account. Your broker borrows that investment size. It allows you to place the trade in to generate the pips. Now, with each micro lot position, each pip that you capture, it is worth 10 cents. So if you go back to our example here of going after a minimum of 50 pips per day, you're going to be looking to generate $5 of profit per currency pair per day. That's kind of first base. That's what we're looking to go after. Now, we also have what are called mini lots. I'm sorry about that, mini lots. Now, a mini lot, it is generally about a $200 investment per trade. And with each mini lot trade, each pip that you capture, it is worth about $1. So if you go back to our original example here of about 50 pips per currency pair per day, at $1 per pip, you're going to be going after looking to capture and generate $50 of profit per currency pair per day. Now, we also have what are called standard lots. Now, a standard lot, that is the standard by which most traders strive to achieve. And this is generally about a $2,000 investment from your trading account. Once again, your broker borrows that investment size. It allows you to place the trade, generate the pips. Now, in the case here with a standard lot trade, standard lot investment per trade, each pip that you capture is going to be worth $10. So at 50 pips per currency pair per day, you're going to be looking to go after about $500 in profit per currency pair per day. Now, to get an idea, to give you some perspective here of what type of lot size you might be trading, generally, if you have less than $5,000 in your trading account, you're probably going to be trading what's called a micro lot or a mini lot account. If you have over $5,000, depending on your broker, it might allow you to trade what's called a standard lot. So as I go through here, I'm going to try to give you examples, try to give you perspective on the type of profit you'll be able to achieve doing this. However, only you can decide how much is in your trading account and what type of lot size you're going to be trading with. So let's go ahead down into, let's go down here into the chart, just like this here. And what I'm going to be showing you here today, what we're going to be looking for, as I told you, in fact, let me back this up here. What we're looking for is the market to form either its high or low for the morning. We'll start off with that range right here between 2 a.m. and 5 a.m. Now, what we have found is that we're going to be looking for the 3 o'clock a.m. Eastern Time candle. We're going to be basing our strategy off of the 3 o'clock a.m. candle. Now, once again, in the live trading club, our professional analysts will be explaining this to you much better. But what we're going to be doing here, in fact, let me go ahead. I've already laid out a couple of these here. I'm going to click on this candlestick right here. Can everybody see here? This is the 3 o'clock a.m. candle from, if you look in the upper left-hand corner, from July 29th. This is going back about a week ago, July 29th, 3 o'clock a.m. And what we had here is we had directional movement. In fact, we had directional movement of 136 pips. We look for the next 3 a.m. candle right here. There's July 30th, 3 o'clock a.m. We had directional movement. We had directional movement of 170 pips right there. Now we go to the next 3 a.m. candle, which is right there. Here's the next 3 a.m. candle. That's from July 31st. And we had directional movement of 89 pips. We come to the next one right here. This is actually Monday morning right there, August 3rd, 3 o'clock a.m., directional movement. of 105 pips. So does everybody see this here? Go ahead, type in a Y, type in a yes if you see this. Do you understand this directional movement? Do you actually see this actually happening here on these charts here? Yeah, Larry says yes. Millie does. Now, some of you might be wondering, well, why does this happen? It's been said. During the European trading session, we have found that the European market, it processes the largest bulk of the Forex transactions. So during this period, you have the banks, they're processing their orders. This provides a huge injection of volume and directional movement into the market. So the trading strategy I'm showing you right here is going to give you and I the ability to take advantage of this directional movement. So what I'm going to do right now is I'm going to go ahead, I'm going to advance this here. Let me zoom in here right now. And this right here, if everybody can see here, that is the 3 o'clock a.m. candle for August 4th. So August 4th, 3 o'clock a.m., let's just say that we're in our trading session, we're in the trading club, and we're going to go ahead and we're actually going to use the trading strategy is what I'm going to show you right here. So here's our 3 o'clock candle, and what we're going to do is we're going to wait for the close of the 3 a.m. candle, and then here is the actual trading strategy. We're going to come in at the close of that 3 a.m. candle, and we're going to set 2 pending orders. We're going to set 1 pending order 10 pips above the high of that candle. So I'm going to come in here right about there, bam. Now this pending order right here, this is going to be what's called an entry buy position. It's an entry buy position, and that's going to be plus 10 pips above the high of that 3 a.m. candle right there. In fact, let me come in, let me delete some of this here to make this a little bit easier to see here. So let's move this down a little bit here. So first position, entry buy position, pending order. We're not in the market until the market either breaks that entry buy or we come in here. In fact, let me make this just a little bit easier here. We're also going to set an entry sell position. We're going to set an entry sell position about 5 pips below. So we're coming here 1, 2, 3, right about there, So there's our entry sell position. It's going to be minus 5 pips below the low. Now, once again, both of these here, these are simply pending orders. We're not in this market until the market either rallies up, triggers our entry buy, enters us into a market buy position, or it pulls back, triggers our entry sell, and that turns into a market sell position. So let's just go ahead in here. Let's see what's going to happen. Bam. Within the next hour, the market triggers that entry sell position. Our entry sell position, this just became a market sell position. This means we've now entered into the market. We believe the market's going down, so we are now shorting the market right there. So we're selling the market right there. Once we trigger one of these pending orders, the first order of business is to come in and cancel this opposite order. So we're going to come in here, we're going to cancel that entry buy order because we're looking to sell the market at this point. Now, the next order of business is to come in here and to set a stop loss. We're going to set a stop loss 5 pips above the high of that 3 a.m. candle. So we're going to come in here, let's see here, 1, 2, 3, 4, oops, 1, 2, 3, 4, right about there. We're going to set our stop loss. In fact, let me talk this. Stop loss when selling. It's a little bit different. As you can see here, some of you are wondering why the difference when we're selling it. Stop loss when selling is going to be plus 5 pips above the high, right there. So we're setting our stop loss 5 pips above the high, right there. So first order of business, we cancel the opposite order. In fact, let me zoom in here just a little bit here. We're set our stop loss 5 pips above. Now, does everybody remember what I said was going to be first base? Our target is going to equal a minimum of 50 plus 50 pips. And the reason for this is because we believe, because of the average daily trading range, we believe this market's going to move at least 50 pips in this direction right now. So I'm going to come in here, and we're going to set our target 50 pips below here. So we're set it right about, oops, or where are we? Right about there. So right about there, so 23580. 235. Oh, wow, so we're almost right there. We're almost right there at our target of a minimum of 50 pips. So within that hour, we almost already hit our target. So let's go ahead in here right now. We're in the market. We're selling the market. We have our stop loss, 5 pips above the high. And once again, that's when we're selling the market. It's going to be a little bit different when we're buying. And our target right here is a minimum of 50 pips. Now, the reason for this is because the market may actually move more than 50 pips. Like I said, the average daily trading range is a minimum of 50 pips. It can sometimes go as high as 200, maybe even more than 200 per currency pair per day. But let's see what happens here. 1, 2, 3, bam. 3 hours later, we do get confirmation. We did, in fact, hit that target. So right there, within 3 hours, we hit that target. That means we just captured 50 pips on that trade. And that was we'll say in 3 hours, in 3 hours of trading. Now, if you were trading a mini lot, on that at $1 per pip, you just generated $50 in profit off of that trade. Not too bad. Not bad for 3 hours. Standard lot at $10 per pip, you just generated $500 in profit in 3 hours off of that trade. How many of you would be okay with that? How many of you would be okay placing a trade using the strategy 3 hours later with a standard lot position? You're up $500. That's just 1 out of the 6 different currency pairs. And like I told you last night, this morning, 5 out of the 6 currency pairs, they won. They won here. So I'm actually going to show you each one of these. Yeah, Larry says yes. Michael says yes. So let's go ahead here right now. Let's clean all this up. We're out of that trade. Let's come in here and let's look now for the next 3 a.m. candle. So we're now out of the market. We're now waiting for that next 3 a.m. candle, which is right there. So here's our next 3 a.m. candle right there. We're already up 50 pips for the week, not too bad. So let's come in here and just to confirm everything, here is, if you look right there, this is the 3 o'clock a.m. candle on August 5th. So what we're going to do is we're going to come in here and we're going to go ahead, we're going to repeat the strategy. Now we're going to come in here, once again, our entry buy position 10 pips above this high. So we're going to come in here right about there. There's my entry buy. Once again, a pending order until we actually cross over. Entry buy is going to be plus 10 pips above the high. Just like that. So I'm going to go ahead and keep writing this out, but on the next one, I'm going to ask those of you here in the room to go ahead and give me this information. So entry buy is 10 pips above, and entry sell, once again, another pending order is going to be 5 pips below, right about there. I'll type this out as well. Entry sell, another pending order, minus 5 pips below. Now, once again, I see some of you are typing in, you're asking why the discrepancy, why the difference? Well, once again, in the live trading sessions, the analysts will be able to explain this. It's generally to take in consideration for the spread. This is just an overview, but once again, the live analysts will be able to explain this in much greater detail. So let's go ahead. We're now waiting to see what this market's going to do. 1 hour later, the market does in fact rally up, triggers that entry buy. This entry buy right now, this has now became a market buy. That's a market buy position, meaning that we are now buying into this market. We believe this market's going up. First order of business is to come in, cancel this opposite order. We're not looking to sell the market. We're looking to buy the market, so we cancel that sell order. And what we're going to do now is we're going to come in and set our stop loss. Now, when we're buying the market, our stop loss is going to go right there at the low of that candle, right there. So let me type that out for everybody here. Oops, sorry about the stop loss. And that's when buying the market. What I just showed you before was when we sell the market. When we're buying the market, it's going to go at the low of that 3 a.m. candle right there. And once again, I apologize. I don't have a lot of time to go into great detail about this, but in the live trading club sessions, our live professional analysts, they're actually going to be walking you through these trading opportunities. So that's one of the neat things about joining that trading club. You actually have a live professional analyst. Does everybody remember what our target is? Our minimum here? We're going after a minimum of 50 pips. So we're going to come in here. We'll set our target right there at 2.3913. 2.391, oops, right about there. And once again, our target is going to equal a minimum of plus 50 pips. Meaning that because we believe the market's going to be going in this direction, and we believe it's going to move a minimum of 50 pips in either direction, this is why we're setting our target right there, just to explain that to everybody here. So let's go ahead in right now. Let's see what we're going to do. Let's see what happens in this market. So 1, 2, 3 hours later, you see here the market came back, didn't hit our stop loss, came pretty close to hit our stop loss, but did in fact, was at 1, 2, 3 hours later, hits our target. And just like on the previous one, in fact, let me just delete this here for time's sake here. In 3 hours, we just captured another 50 pips on that trade here. Not too bad. Now watch what happens on this right here. We're out of that trade. However, the market continues to rally up. Here's a situation where in the live trading club, our live professional analysts, they might be able to help you walk through this trade, move your stop loss up to lock in profits as you're going up. In fact, that directional movement right there was good for 164 pips. So I just showed you a strategy to get on first base. Overall, there's 160 pips of market movement right there. So how many of you are liking this strategy? How many of you feel you're pretty much getting this at this point? And with just the last couple of minutes of me showing you this, you're kind of understanding this, and you pretty much have this under control. Yeah, Larry says yes, Max says yes. So here's what we're going to do. Let me come in here quickly. Let me delete all this here. I'm now going to bring this now to last night's trading opportunity. In fact, let me show, let's see here, where are we, right? Okay, here's our 3 a.m. candle for last night. So imagine this was 3 o'clock a.m. this morning, right there. Here's our 3 o'clock a.m. candle. You're coming in to do this trading strategy. How many pips above the high are we going to set our entry buy? Go ahead, type in how many pips above that high we're going to set our entry buy. Yeah, Max says 10, Stacy says 10, Shane says 10. Yeah, we're coming here 10 pips above, right about there. Once again, entry buy equals plus 10 pips above that high. Now we're also going to come in here, set our entry sell 5 pips below that low. So we're coming here and let's see here, right about, let's see, 5 pips below, 1, 2, 3, 4, right about there. We'll just put it right there. So our entry sell is going to equal minus 5 pips below the low of that 3 a.m. candle. So we have our 2 pending orders here. Let's see what's going to happen here. Bam. Within 1 hour, the market pulls back, triggers my entry sell. That entry sell, that just became a market sell. So I think it was Tahir was saying, how can you tell which way the directional movement's going to be? Tahir, this is how we do it. Tahir, do you see how we're doing this here? The market triggers my market sell. So I now believe, I have that educated opinion, the market's going to be going down. Now, once again, in the actual live trading club sessions, you have a live professional analyst walking you through, helping you with these trades. So first order of business now is to come in here. We're going to cancel. We cancel that entry buy, just like that, and we're going to set an entry, or we're going to set our stop loss now. Now, how many pips above the high are we going to set a stop loss? When we're selling the market, how many pips above the high? Yeah, Alexander says 5, Julie says 5. So we're coming here 1, 2, 3, 4, 5 right there. We're going to set in our stop loss. And once again, that is when selling is going to equal plus 5 pips above the high right there. Now, how many pips minimum are we going after for our target? Once again, the average daily trading range on the low side, how many pips are we going after? Yeah, Larry says 50, Brian says 50. Yes, we're coming in here. We're going after 50 pips. So right about right about there. So 2.23822. 23822. Oops, let me come back in here. Let me make sure I'm doing this right here. So plus 50 pips. Oops, right about 238. 23821. I'm sorry. 238. Oops. 238. Right about there. So there's our target. Once again, target equals a minimum of plus 50 pips. Right there. So let's see what happens on this one. How many of you feel pretty good? That we're going to hit our target on this one? If you look back here, let's go back over here. Let's look at these last couple trades here. Or we've had, let's see here, we had 1, 2, 3, 4, 5, 6 successful trades so far in the last week and a half. How many of you feel pretty comfortable we're going to be successful in this one? Yeah, Julie says definitely. Jennifer says yes. So let's see what happens here. 1, 2, 2 hours later, bam. We just went ahead. We hit our target right there, and we just captured another 50 pips. And that one was in 2 hours. And that was actually last night. That was last night's trade. In fact, I'll bring it to the live market to show you here. Right there. So watch what happens. We bring this to the live market. Look at this right there. Look at all that directional movement. We had directional movement here of what, as much as 211 pips. So does everybody see this? Does everybody understand now how this actually works? Right there, once again, we were going after a minimum of 50. There was actually over 200 pips of directional movement right there. So here's what we're going to do. That was last night. Last night on the pound New Zealand dollar, we were successful. On the Great British Pound Australian dollar, here's our 3 o'clock a.m. candle, 204 pips directional movement. On the Great British Pound Canadian dollar, 178 pips directional movement. On the pound Swiss franc, we lost 60 pips. So we had one loss. We lost 60 pips on that one. I just showed you the pound New Zealand dollar. Let's see here. Pound yen, 163 pips. And on the Great British Pound US dollar, 129 pips. So you won 5 out of 6 trades. How many of you would feel pretty good about this strategy? How many of you would love to learn how to do this strategy from a live professional analyst right here? Yeah, so here's what we're going to do. I just showed you the London breakout strategy. It's done on these these different currency pairs here. In our live market forex mentorship program, you're going to be able to look over the shoulder of a live professional analyst while they're doing this, actually get to trade live with them when they're doing this. What I showed you here, this is only one of the strategies you're going to learn as you're going through this here. So what I want to do right now, I'm going to go ahead and I'm going to send that link out. I'm going to send this link out to everybody here in the chat box here. I'm going to send this link out. If you can go ahead and send that link out for me, I'm going to go ahead and walk everybody through here, explain what you get when you enroll into this trading club. Now, when you enroll into the trading club, you're actually going to have 2 live professional analysts. They're going to be analyzing the market, walking you through, explaining to everybody, showing you in these live trading sessions how things are going to work. Now, you have Joshua Martinez. He's had days where he's made $4,000, $5,000, $8,000 in one day. Using the same trading strategy, he made over $10,000 in 30 minutes. Christopher Pulver, another one of our analysts here, 60% in his trading club, in his own personal account. Now, our students, let me show you what some of our students have done. Christopher Pulver reported in this trading session, our students made anywhere from 120 to 400 pips during that live trading session.